Good morning, good morning, good morning, good morning, good morning, guys, and a happy Sunday to all of you. Alrighty, so just a quick heads up, I am a bit under the weather today. I think I caught Krisha's bug and I wasn't supposed to be doing a video today, but there is something really interesting going on the charts at the moment. A cascade of events, if triggered, could lead Bitcoin having a big move all the way up to $25,000. We're going to fill this gap over here that I have marked out for you guys. So in today's video, I'm going to be talking about the conditions that we need to see. We need to see certain things trigger to have that cascading move all the way up to $25,000. And this is also lining up with everything that we've been talking about over the past few weeks, right? We have a bigger story going on. So I'm going to be giving you guys an overview of that story as well. We're not going to spend too much time, but I want you guys to keep that at the back of your mind over here, because at Mango, we're always thinking about the big picture as well, right? Not just the smaller moves. And since today is a Sunday, I want to do a quick market overview where we'll be looking at the US 10-year, the Dixie. We won't be looking at the charts really. I just want to quickly talk about it and how it's going to be affecting the markets in general, not just crypto. I'm going to quickly look at the trend and the volatility on the dashboard. So we're going to be looking at the weekly time frame and the various volatilities on the 4-hour, the 12-hour, and the daily, right? I'm going to talk to you guys about how all of this is fitting into our story over here. So let's go ahead and start with the US 10-year. As you guys can see, maybe you guys can't fully see. I'm going to go ahead and zoom in a tad bit. The US 10-year is down 4%. Okay, now we're not looking at the US 10-year bond. We're looking at the yields over here. Okay, so yields are down by 4% on the 10-year, which is pretty significant. Remember what we've been talking about over here at Mango for the past 2 years now. When bond prices go up, it means that yields go down, right? They move inversely to each other. Yields going down, by the way, guys, is a loosening of financial conditions, okay? Remember, yields going down is a loosening of financial conditions. A very simple way to understand this is just think about your mortgage payments for your house, right? If your mortgage payments go down, you have more money to spend on other things, right? So if your mortgage payments go down, your financial conditions are loosening. It's getting easier. You have less outgoings. You have more in your pockets to spend on things like investments or even consumer purchases, right? So loosening of financial conditions is generally considered to be bullish for the markets. Now, with that being said, we do have to keep at the back of our mind that the market might be pricing in a recession with these yields coming down over here. Because remember, we talked about this in one of the previous videos, the front end of the curve. And what I mean is, guys, the shorter time frame bonds. So for example, the 2-year bonds are trading at a much higher percent. I believe the 2 years trading at around 4.25%, right? So the 2 years trading at 4.25 and the 10-year is trading at 3.5%. So the yield curve is inverted. Usually you want the slope to be going upwards, where your lower time frame bonds, because they should have less risk, should be giving you lower yield than your higher time frame bonds. When I say higher time frame, I'm talking about longer duration, right? So the 10-year should be giving you more yield because there's more risk. More can go wrong in this duration, right? Now, I have been getting questions in regards to the yield curve and recession, and I have answered this question in a different video. So what I'm going to do for you guys is I'm going to go ahead and snip out that section of the video and post it for you guys. So if you guys haven't subscribed to the channel yet, make sure that you guys do. And if you guys are enjoying this kind of content where I do a breakdown of the charts as well as the macro overview, please go ahead and let me know in the comment section and hit the like button. You guys have no idea how much your comments have been motivating me to keep up these videos, because this kind of content, guys, is really difficult to do, and your comments from the Mango community members have been so motivating. So thank you so much, guys, for your comments. It honestly means so much. It helps me keep this up every single day. All right, so going back to what we are talking about, we are seeing the yields on the US 10-year come down, which is good. It's a loosening of financial conditions. We're also seeing volatility in the bond market, by the way, suppress, which is also really good. We'll talk about that in a different video. Now, I want you guys to draw your attention to Dixie. Okay, Dixie sitting at 103.91. Now, this is actually a big move on Dixie, considering it's come down from a high of around 114. In fact, I do have a screenshot of what I was supposed to talk about in the previous video. Right over here, you guys can see that I was supposed to do a dashboard analysis in the previous video, but the video had gotten a bit too long, so I kind of snipped it out. You guys can see that the US 10-year has come down from a high of around 4.34%, the US 30-year 4.42%, and Dixie has come down all the way from 114, right? So across the board, guys, we are seeing a loosening of financial conditions, and this is beginning to line up with what we've been talking about now, right? We've been talking about this little matrix right over here, which goes over the 4 stages of the mining cycle and how it lines up with Bitcoin's bull markets. And we had discussed that, hey, we are not sitting in the inventory flush out stage, nor are we sitting in the rising bull stage, but we are more in the shakeout stage, right? Somewhere in between this phase over here. And this was around 3 weeks ago, where a lot of people in the markets were thinking that, hey, we are already beginning our rising bull stage. And I was like, nah, I don't think so. I think we need a few weeks more, right? Around 4 to 6 weeks more at minimum, if not around 6 to 8 weeks more, so that we are likely in between the shakeout and the rising bull stage, right? So somewhere around here. Now I believe that we are inching closer towards the rising bull stage, because we're beginning to start seeing overall macro conditions line up as well. I'm not saying these conditions are good, by the way. Okay, I'm not saying that they are perfect and they're good, but I'm saying that we're inching towards the conditions that will lead us towards that rising bull stage. But remember, even the rising bull stage is not one straight line, and we've been talking about that in the most recent videos. I am under the opinion that we get a move that is either something like this and then up, or a smaller move up and then a longer bull rising stage. And we don't know which one of these two is going to be, right? And we discussed 2 different possibilities in the previous video. And in today's video, we're going to add on to that, right? I'm going to show you guys a series of events that need to occur for us to get either A or B over here. All right, so we'll get back to this very, very soon. I want to quickly go over what we're seeing over here in general on the dashboard in regards to the crypto markets, right? Right over here, you guys are seeing that across the board, we have, okay, this is the weekly time frame, by the way, guys. We're looking at the dashboard on the weekly. And again, if you guys are new to the Mango community, you guys can find this dashboard at app.mangoresearch.co. Again, that's app.mangoresearch.co. There's a free version and there is a premium version. Feel free to check it out. But for the most part, you guys don't really need the premium version. The free version should be good enough for most of you. All right, so we're looking at the weekly time frame over here, and you guys can see the trend for most of the coins are short, right? Including Bitcoin, including Ethereum. But I want you guys to draw your attention to ETHBTC, right? So this is Ethereum against Bitcoin, and LTC USD. Both of these are long, okay? And this is something to keep at the back of your minds, guys. So Ethereum is long against Bitcoin, and it has been long against Bitcoin for 160 days. It has maintained its long for the entire bear market. That is a sign of strength. And you guys know that I'm a Bitcoin bull, okay? You guys know that I prefer Bitcoin over Ethereum. But you got to call a spade, and all we care about is finding strength. If this helps us accumulate more Bitcoin, then so be it, right? So Ethereum is definitely showing us some strength over here, and you guys know what we like to do. We like to keep at the back of our mind what has been strong during the bear phases, and then use that momentum in the bull markets to accumulate more of our favorite coins. So for you guys, it may be Cardano that you guys prefer to accumulate. For you guys, it might be Solana. It doesn't matter. Do not let your emotions get the better of you, right? Your job is simply to increase your stack. Whether your stack be USD, whether your stack be Bitcoin, whether your stack be Cardano, it doesn't matter. Be unemotional and trade, okay? As soon as you become a trader, guys, you are in the business of simply increasing your stack. Do not get married to one single coin. Now, I also want you guys to draw attention to Litecoin. LTC USD has flipped long 13 days ago. You're already up 9% had you taken the trade 13 days ago, right? Now, this is surprisingly interesting because this is against the USD pairing, okay? So what this is telling us is this Litecoin is one of the first coins to start its bull run. Now, I believe Litecoin's having its halving, correct? I believe in October or August of don't know how to spell halving clearly. October or August of this year. Let me know in the comments down below. I forget, but either way, this is very, very reminiscent of the 2019 market where Litecoin had started the run and then every other coin started running as well, leading into Bitcoin's final big run all the way to $14,000, right? And we are talking about a move from around $3,000 to around $14,000. Now remember, Litecoin first ran giving us the signal that, hey, Bitcoin may run after Litecoin, and then we got the Bitcoin run. If we get something similar this time, this also lines up with our theory that we're sitting somewhere around this stage of the market where we're leading into the rising bull market and we're not there just yet. So guys, patience, right? Patience, and we're going to wait for those triggers that we've been talking about over the past few weeks on this channel. So I'll be keeping you guys updated on whether the triggers have hit or not. And in today's video, we're going to be talking about a couple of those triggers. So yeah, just bear with me a tad bit. I just want to talk about one last thing before we get into the actual charts. Okay, so right down over here, I've taken screenshots of the various timeframes off the dashboard instead of going through each one of the timeframes for you guys. If you guys are interested in going through it yourself, you guys can simply go on over to the dashboard and go through all of the timeframes right over here. But what I've done is I've already done that, and I've taken screenshots of each one of the rows for Bitcoin specifically. Okay, looking at the 4-hour time frame, the 12-hour time frame, and the daily time frame. Okay, I want you guys to focus on two columns: the trend over here and the volatility. Okay, so first we're going to go through the trend. The trend for the 4-hour is now long. The trend for the 12-hour is also long. It flipped 3 days ago. Okay, the daily trend is still neutral, but it flipped from short to neutral. Okay, it flipped from short to neutral 3 days ago. Now, what we're seeing across all these time frames is that the volatility is still low. So we have low volatility with rising trends on the 4-hour and the 12-hour, and the daily has flipped from short to neutral, right? Now guys, these are precisely the conditions you are looking for when you want to see a higher time frame trend switch from short to long. And remember, the trend for Bitcoin at the moment on the weekly is short, right? We just looked at it. It's been short for 272 days, almost a year. The dashboard has called the weekly trend on Bitcoin short, right? So if we want that to switch, okay, the best conditions are when the underlying timeframes, the lower timeframes, start switching to a long trend with low volatility. That's really important. Okay, the low volatility is really important. So that forms the rounded formation needed to break through the higher time frame trends. So we're still waiting, guys. We're still waiting. Remember, the daily is still neutral. Okay, we don't have that just yet. So let's wait for the daily to flip into long. Then we're going to go and look for the 2-day and the 4-day to flip as well. We don't have these three just yet, but it's looking good. Put everything together that we've been talking about over the past months now. It's all coming together. Alrighty, here we are on the actual charts, and I'm going to go through now the possible series of events that may take place now that could cause Bitcoin to have a big move all the way up to around $25,000, and then potentially even further up, all the way up to around $50,000 if things play out, especially if you take into consideration what we talked about in the previous video, guys. If you guys do remember, we talked about the longer term potential targets for Bitcoin, and we went through a series of confluencing events using the Ichimoku as well as the fibs, right? And right over here, you guys can see all of our fibs, and we showed in the previous video how each one of Bitcoin cycles has had Bitcoin bounce up to the 0.786 Fibonacci level, which has lined up with the top of the cloud and then has retraced, right? It did so in the 2015 cycle. It did so in the 2019 cycle. Now, the difference between the two cycles was that when Bitcoin did it in 2015, the cloud was green, which allowed Bitcoin to have a continuation of the bull run all the way up to $20,000 without a deep pullback. In 2019, however, when Bitcoin had its bounce up to 0.786, the cloud had not turned green yet, which caused a deeper pullback back into the 200 moving average. And then we had the big Bitcoin bull run only after the cloud turned green, right? So now we are in a current posture where Bitcoin may have a rally, but the cloud is still red. And that rally may actually take us all the way up to $50,000. So going back to our chart right over here, we're going to see how everything over here structurally actually lines up with our indicators. Now remember guys, we like to use indicators because it keeps us objective, right? The Ichimoku keeps us objective. When it comes to trend lines, however, it's really hard to stay objective, which is why we try to use them as secondary tools. In the previous video, we used objective tools, right? Our Fibonacci as well. While they can be subjective, use them on the lower time frames, we use them on the cyclical time frames, which allow them to be a lot more objective. The Ichimoku is flat out objective. Today, we're going to be talking about these patterns, which can be subjective, but we are going to be using them in conjunction with our Ichimoku to show you guys how it all confluences together, giving us a series of confirmation signals to start triggering that bull run position that we're looking for, right? So let's go ahead and start with a clean slate. What I'm going to do over here is I'm going to hide all of our indicators, right? And I'm also going to hide our drawings very temporarily. We're going to go through each one of these one by one. All right, cool. So here we are, clean chart. And what I want you guys to first focus on is this little structure right at the bottom over here, right? Now, we've been putting in the structure for, let's say, around 8 weeks, right? Remember, each one of these bars is one single candle, one single weekly candle. So that's 8 weeks, 56 days, okay? Now, a lot of people may have noticed this. Bitcoin's putting in a sort of rounded formation, a possible ascending triangle, and I have that marked out for you guys already. We're going to go ahead and unhide it right over there. Nice little ascending triangle, and we actually have a nice little measured move for this ascending triangle where you simply take the length from the wick to the height of the triangle and you can go ahead and plot the potential breakout target, which is pointing to around $19,000. Now, you guys know that I love patterns within patterns within patterns, right? One single pattern alone is not very exciting. It's when we have a cascade of patterns that line up with our indicators that makes things beautiful, that makes technical analysis so exciting. Because when it all comes together, guys, you capture those massive wins. And right over here, we have a pattern within a pattern that may potentially lead to a big move. So I'm going to go ahead and turn on the second pattern over here. Okay, first let me go ahead and hide the ascending triangle pattern. I'm going to hide the measured move as well. And we're going to go ahead and turn on the falling wedge that I have marked out for you guys, okay? Now, some of you might be saying, hey, Sean, this falling wedge has already broken out. Yes, it has. It has broken down. And if you guys have been following Mango for a while, you guys will know that one of my favorite patterns is a falling wedge that has failed to break up and has instead broken down and then breaks back into the wedge and breaks up, right? And over here, we might be seeing something similar, a falling wedge with our ascending triangle that we just marked out. And now here's where it gets really cool, guys. Here's where it gets really cool. The measured move of that ascending triangle lines up with a potential break, ever so slightly, okay, of the falling wedge. Now remember, this falling wedge needs to break back up above for us to say that, hey, we're looking for that bigger move. And even then, we have a few more things to contend with before the massive move to 50,000, okay? So let's not get ahead of ourselves, okay? Let me go ahead and quickly delete these drawings over here, okay? All right. The falling wedge, right, what we've marked out over here is not just arbitrary. It's lining up with our Ichimoku Tenkan. And the measured move of the ascending triangle is also lining up with our Ichimoku Tenkan, right? And if you guys remember from the previous video, we discussed how the weekly Ichimoku Tenkan is going to be our guiding light. Reclaiming our Tenkan is going to be the first big trigger for the potential bigger move all the way up to the cloud, right? Well, now we are seeing that our ascending triangle, okay, our smaller pattern right over here, its measured move points to the Tenkan. And that Tenkan is lining up with our falling wedge. And if we break our falling wedge, Well, we now have the measured move of the falling wedge, which I have marked out over here for you guys. Oops, not that one, this one over here. Okay, it's simply the length of the wedge, guys, right? You take it from the base of the candle all the way to the candle closes, or you can use the wicks too. You don't need to be perfect with this, okay? So we go ahead and do something similar and plot out our measured move for our falling wedge. Right at our Tenkan, we are going to see that we line up with the top of the candle closes over here, guys, which is around 24,378. And what do you know? That lines up perfectly with our weekly 200 moving average coming in at 24,500ish, right? Now again, guys, this is assuming that the weekly 200 keeps going this way, right? But we've stayed underneath the weekly 200 long enough for the weekly 200 to start flattening out and potentially angling downwards, more like this. Actually, it's going to happen over a period of time. But also remember that this structure is not going to break out from where the Tenkan is. That's assuming that price actually goes up in one straight line over here. Now, Bitcoin could do that, right? Bitcoin could do that. But let's go ahead and draw this a little bit lower. Say that it happened somewhere around here. We are looking at potentially somewhere around $23,000, okay? $23,000 to $24,000. Again, we do not need to be perfect with this. The point over here is a cascading series of events that's lining up with our objective thesis, okay? We had objective triggers with our weekly Tenkan and then a move towards the Kijun, etc., from the previous videos. It's one big story being put together. Remember what I told you guys, you're not going to get your entire life-changing profits from one single 20-minute video. Life isn't that easy, guys. We're going to have to put in the work. And if you're willing to put in the work and join me on this journey, I promise you, you guys are going to be successful at this. All right. So if we see these triggers, the weekly Tenkan, we still then have the weekly 200 to contend with. We see the weekly 200 get claimed as well. Then things get really, really exciting. At that point, we can see a move all the way up to the top of the cloud because we have the Kumo twist, which I explained to you guys is a magnet, right? Which also lines up with our Fibonacci retracement move that we talked about in yesterday's video. So to summarize everything we talked about today, we have low volatility on the dashboard. The trend has switched from short to neutral on the daily time frame. The 12-hour trend is long with low volatility. The 4-hour trend is long with low volatility. And on the charts, we are seeing a low volatility consolidation structure on the weekly time frame as well, where if we can confirm weekly candles above the Tenkan sitting at around $19,200, right? Note that down, guys, $19,200 at the recording of this video. If we can confirm candles above there, it's going to also line up with a break of this falling wedge, a cascading pattern leading us to the test of the weekly 200. If we can claim the weekly 200, well, that's when we start getting excited. So I hope you guys enjoy this video. Please let me know in the comments down below. Again, your comments have been so motivating for me to keep these videos up because putting all of this together does take a lot of effort. So again, guys, please keep the likes, the subscribes, and the love coming. I'll see you guys in the next video. Until then, do the mango way, do it the stress-free way. Ciao.